Welcome to this special interview with Craig Martin, the chairman of Dynam Capital and the fund manager for the Vietnam Holding Fund. Craig, welcome.
Pleasure to be here.
It's been an interesting year for you guys. Do you want to give us a quick summary of what's been going on?
Well, look, it's been a very busy year, but a very rewarding year. And the fund performance has been fantastic. Our fund year to date is up about 15%, outperforming its benchmark. And the fund's been recognized for its performance. We picked up a couple of awards, which is always very nice. The Citywire Best Emerging Market Fund for 2024 and the Investment Week Best Investment Trust for 2024 for emerging markets. So it's always nice to be recognized for the efforts of the team and the strong performance. And as a manager, Dynam Capital, we're AAA rated by Citywire. We're the only Asia fund manager, I think, outside of Japan that has that rating for closed-end fund management. So a year of strong outperformance, a year where I think we've received recognition for our nimble stock picking, portfolio construction, for just doing simple things well in the Vietnam market. And in addition to the strong performance at the net asset value per share level, the fund's share price, the funds are listed on the main board of the London Stock Exchange, they're up about close to 28% this year. And that's because we've been able to narrow the discount to net asset value. As you're aware, with investment trusts, many of them trade at a discount to net asset value. I think the sector-wide average is about 16% discount to net asset value. Well, through the course of this year, our discount's gone from about 5% to a small premium. And that's meant that just in the past month, we've been able to do something we haven't been able to do for a very long time, which is to issue new shares.
Wow.
So since early November, we've been issuing new shares on a regular basis. And we can only do that because the fund is trading at a premium to its net asset value. So it's been a remarkable year. Strong net asset value performance, great share price performance for the investors in the trust. And because we're trading at a premium to NAV, we're able to enlarge the size of the trust. So a year of tremendous results for us.
That's, I suppose, a cynical investor would say, but have you outperformed? I mean, what's the benchmark? How, because is it Vietnam that's gone up and you've run as coattails? Or?
Look, it's a very fair question. We're actually looking really at absolute returns, but yes, we have outperformed the market. So the market in Vietnam, or the Vietnam All Share Index, we're about 600 basis points, about 6% ahead of that year to date.
Oh, wow.
And in fact, over the last, say, 3 or 5 years, we've averaged about 500 or 600 basis points of outperformance to the market, to the index. And we've also outperformed all of our peers. So we're the top performing fund in Vietnam, as well as one of the top performing investment trusts that you can buy on the London Stock Exchange. So yes, good outperformance.
Okay. My question then is always, when you see such significant performance, like, was there one investment that just outperformed and blew the doors off, or was this a portfolio-wide, perform increase?
Look, I think it's a bit of both. So we've been able to be quite nimble over the last 3-4 years around our stock selection, but we've also been determined to back our winners. And our number one position, a company called FPT, it's a technology company, a digital champion in Vietnam. And its share price is up more than 60-70% this year. And that's our number one position. And has been for about 5 or 6 years.
Okay.
So that has driven quite a lot of portfolio performance. So we're delighted in that. But across some of our other picks as well, we look at different sectors and pick the best companies in those sectors. So in the banking sector, we've had some strong outperformance. In companies that operate and develop industrial parks. So this is real estate, but for people who are manufacturing in Vietnam for export. And a few companies in that sector have been very strong performers.
Okay.
They've seen a lot of interest from manufacturers looking to perhaps diversify from China and other markets into kind of a China plus one scenario where Vietnam stands out there. And so those stocks have done very well. So yeah, it's been a few key outperformers, but it's also been by being nimble in our stock selection and in our portfolio construction.
So I'm gathering there hasn't been any sort of changes to your strategy over the last sort of 24 to 48 months. It's been a fairly steady
Fairly steady in terms of our investment strategy. although we have been able, I say, by being nimble, to react to market conditions. So in the last two years, maybe 2.5 years, we've been underweight residential real estate opportunities. Now, in some ways, that's a bit odd because Vietnam is going to have to build lots of houses. Its urbanization rate, the percentage of the population that live in cities, is just under 40%. That's Western Europe 50 years ago, or China 20 years ago. So in the next 20 years, Vietnam's urbanization rate will probably go to 60%, something like that. So you have to build millions of houses. But the residential sector's been soft. It's had a few challenges. A few companies have been under the spotlight for bad practices in the sector, nothing in our portfolio. So we were cautious about the sector, and with interest rates being a little bit higher the last couple of years. So that's helped us as well. So we've avoided some kind of traps, value traps, should we call them, whose time will come again, I'm sure, in the future. So again, being nimble around our stock selection and our portfolio allocation, but nothing changed to our fundamental strategy. And our fundamental strategy is find good companies with good growth, reasonable valuations, and find management teams who are willing to kind of meet with us and listen to what we have to suggest, particularly around the areas of ESG, environmental social governance.
Yeah.
Now, Martin, that's not so that we feel good about ourselves, although we do. It's by using tools of ESG as a filter. So if we can find companies that are really focused on good governance, how their boards are constructed, and how they report to investors, how investor relations are, then that goes some way of helping us in stock selection, right? It's a bit of self-fulfilling kind of filtering amongst those companies. So we choose to find good management teams, good businesses at reasonable level of valuation with good 3 to 5 year prospects. So nothing's changed.
So is there anything from the regulatory environment then that's affected your investment decisions, or obviously not just ESG, but anything else affecting Vietnam?
Well, look, I think there's a little bit of excitement, and there has been for a few years, about when its stocks and the stock market will be considered as emerging market proper. So at the moment, Vietnam's stocks and stock markets are considered as frontier.
Yeah.
So they're the largest part of the frontier universe, which is a relatively small universe globally. It's about $100 billion. Whereas if you're in the emerging market proper, that market size is $4 or $5 trillion.
Wow.
So the Vietnamese authorities have been trying to encourage steps that would allow Vietnam to be seen as emerging market rather than frontier market. And so there's been a lot of work being done on that. And just about 8 to 8 weeks ago, market regulations removing some obstacles, making it easier for foreign investors to invest into the market. Now, that will take time to flow through, but we could see that next year, by one of the agencies, FTSE Russell probably, they might get that kind of promotion from frontier or from frontier to secondary emerging market. So that will be a positive step. There's been a lot of also talk recently over the recent weeks in Vietnam of how to make everything a little bit more efficient. Vietnam's enjoyed terrific growth in attracting foreign direct investment into Vietnam, and it's helped power the GDP growth, the economic growth. But the government also wants to see the domestic market increase, and it recognizes to do that, it's got to improve the infrastructure. So it wants to improve the roads and the railways and the bridges and that kind of infrastructure. And there's been a bit of bureaucracy over the past 3-4 years. So they're trying to address that. And so I think that's something that's starting, and we'll see more of that next year. And perhaps completion of some projects, and some projects that have been delayed will get accelerated. And that's fantastic for the next 3 to 5 years, because new infrastructure has a multiplier effect on the domestic economy. And that will percolate its way down into some of our companies that are playing in either modern retail for some of our retail stocks, some of the industrial park developers, and maybe some of the residential real estate developers when their time comes again.
So would that be a sort of, are you thinking there's going to be a sort of a planned rebalancing then of the portfolio, or is this just going to be a natural evolution of it?
Well, we we do rebalance regularly, and we meet each week. We're looking at our portfolio, and have we got the right names and the right positions in the portfolio. We've got some fantastic kind of category champions. A technology champion, FPT, our number one position. We've got a few banking champions in our portfolio and some retail champions. But what we're also looking for is, what are the rising stars? So these companies have been fantastic. They've been compounding their earnings at 20% per annum over the last 5-6 years. But we're trying to find the next ones, these rising stars. So when we find those, we've got to make a little bit of room for those in the portfolio. And we're conviction-led. So when we start looking at a company, it might come in at maybe 2% of the portfolio. But over time, if it's hitting all of its KPIs and the criteria we set for it, it could go up to 8% of the portfolio. So we're always on the lookout for opportunities to rebalance. But we're trying to get a solid overall portfolio return. Our portfolio is valued probably on about 11 times price to earnings for 2025. Yet we see a good maybe 18 to 20% earnings per share growth for next year. So we'll be driven by the valuations, we'll be driven by the companies, and also the changes in their operating environments that give us more conviction will increase, or perhaps less conviction will decrease accordingly.
So what are your expectations then for next year, 2025? Obviously, these are your best guess, I suppose, for the economy, not just from a macro economy, but also is there any star sectors? You've obviously mentioned property there. Do you think that's going to be next year, or is that going to be 2 years out?
I think probably where we're seeing the quickest kind of transitions, the banks are relatively cheaply valued, and some of those are good bellwethers for improving overall economic condition. That's one thing to keep an eye on. Some of the retail stocks, so these are companies that are omni-channel retailers. They've had a soft trading over perhaps the last 12 to 18 months. As Vietnamese consumers been a little bit cautious coming out of, obviously with COVID, and then with what's going on geopolitically, people are a little bit nervous around that. But we're seeing some of those retailers adjust their product and their portfolios, and their margins are starting to improve. And so we've had a strong look at some of our top retail names, and we've been adding to those. And some of these are now also category champions. Mobile World, which is also in our top 5 companies, it's got a 55% market share in digital goods around computers and mobile accessories and mobile phones. It's got about a 50% market share in Vietnam in consumer electronics. And it's been pushing into the grocery market. And it's been doing this through a combination of physical stores and online retail, the clicks and the bricks as well. And we think its fortunes are strengthening. So that's something we're keeping a close eye out for next year. Also within that retail space, there's a couple of pharmacy companies, one in our portfolio. And over the last 5 years, they've increased the number of pharmacies from retail pharmacies, a bit like Boots the Chemist, from about 60 or 70 stores to 1,700 stores.
Oh, wow.
And really cracking a very disciplined process around inventory management, a very strong back office system to manage their inventory. And so we've enjoyed quite a strong performance from that company, and perhaps more to come next year. Our banks, well-selected portfolio of banks, they're kind of like a bellwether for economic growth. But again, a few of those are also transforming. They're becoming more digital in their offering. Just a few years ago, there were more Facebook accounts in Vietnam than there were bank accounts. That's changing, and the banks are becoming more digital as well.
Right, yeah.
So you've got a bit of the growth of fintech, shall we say. Yet these are banks that have got strong balance sheets, strong profitability. So I think there's a big push on digitalization in Vietnam. And just last week, Vietnamese Prime Minister and the government welcomed NVIDIA, who's investing heavily in Vietnam in AI and data centers. It welcomed Jan LeCun, who's the head of AI for Meta, from the US, and also one of the top guys at Google AI was in Vietnam. And the Vietnamese government are trying to see how they can position digital trends and position the country for new waves in things such as AI. So I think that's very encouraging, that they're looking to the future And that will open up the opportunities for investors like ourselves.
That's great. That's fascinating. So you're excited for 2025. Is there anything you'd like to sort of you think you haven't covered that you'd like to talk to investors about that you're want to cover?
Well, look, I think you've got to, as an investor, you've got to look at the reward and the risk and the uncertainties. And I'd say this year has been globally, obviously, a year of great uncertainty. Elections in so many different countries,
Yeah.
And we're waiting for President Trump to be inaugurated in early part of January. And there are question marks, frankly.
How did you perform? Sorry to interrupt, but
sure.
how did Vietnam perform in the last Trump?
Look, really well. I
Okay.
think it accelerated this kind of China plus one, as perhaps there was a move globally against China, broadly defined. China, and tariffs and what have you. And that encouraged manufacturers to look to diversify and move some of their production to Vietnam. So that could continue around that. Vietnam's very pragmatic. They were one of the first to kind of call President or Trump elect and congratulate him. And I think encourage him to come and visit Vietnam as soon as he feels he can next year. So I think they want to play a very careful game, a balanced game of politically keeping close to America, but also keeping close to China and to Japan and Korea. So Vietnam's a very open economy. The downside for open economies is what happens if there is big increases in trade tariffs next year. So Vietnam is aware of that, and they're keeping a close eye on that. They're looking to see other ways that they can import more stuff from America to kind of balance that out. So I think clearly there are some uncertainties as we go into 2025. But I think the push from the Vietnamese government to how to accelerate the rollout of domestic infrastructure, I think that bodes very well. How to improve the human capital in terms of the education and how to upskill that so that Vietnam not only is it an industrial economy, but it's a modern industrial economy, data-driven with AI and these kind of things. I think that bodes very well for the future. So I think our portfolio is in great shape, and we're looking forward to 2025. It's going to be a big year for Vietnam. It's the 50th anniversary of reunification.
Of course, yes.
In 1975. So I think there'll be lots of celebrations and commemorations of that, but also reflection on how far Vietnam's come in the last 30, 40 years. You're coming out from the cold to become this kind of center for made in Vietnam manufacturing, and also how to develop best-in-class companies going forward. And our job's very simple: find good companies, reasonable valuations, not get carried away, not to try to do anything clever, but also to be nimble and be able to react to the opportunity. So that's our focus for 2025.
Well, it sounds like it's very exciting times ahead for Vietnam and yourselves.
Well, we hope so. We hope to continue the strong performance that we've enjoyed in 2024.
Indeed. Well, congratulations on 2024 and the best of luck for 25.
Thank you so very much.
Thank you very much.